What if I told you that while most traders are chasing the latest meme stock, three companies are quietly positioning themselves to profit from a $500 billion arms race that could determine global dominance for the next decade? I'm Robert Roy from Wealth Builders HQ, and in the next few minutes, I'm going to reveal the three stocks on my watch list that are sitting at the center of the most explosive confluence of technology and politics we've seen in my entire lifetime. We're not talking about another crypto bubble or some AI hype cycle. We're talking about a fundamental reshaping of global power, where AI isn't just changing how we work, it's literally determining which nations survive and which ones fall behind. While everyone's debating whether AI is the next big thing or just another Web3 style pump and dump, entire governments are betting their national security on it. As of this recording, it's reported that the Pentagon is running nearly 700 AI projects right now. Meanwhile, China is pouring billions and billions of dollars into AI research themselves. And right now, three specific companies are positioned to cash in on both sides of this technological arms race. Speaking of AI versus Web3, is AI just another overhyped bubble like crypto was? Or is this the real deal that's going to reshape everything? Drop your thoughts in the comment section down below because I want to hear what you think. Now, before we dive in, let me be clear. This is for educational purposes only, not trading advice. Always do your own research before considering any trade for yourself. But if you understand what's really driving the market right now, these three companies represent some of the most compelling opportunities that I have seen in my 25 plus years of trading. Here's what I'm seeing in the markets today. We're living through what analysts are calling an AI arms race, not just between companies, but between entire nations. The United States, China, and other global powers are pouring unprecedented resources into developing AI because they understand that AI dominance could determine economic and military leadership for decades to come. At the same time, geopolitical tensions are running hotter than we've seen in years. From the ongoing conflict in Ukraine to rising tensions in the Middle East, global defense spending hit a record 2.4 trillion with a T trillion in 2023. And it's showing no signs of slowing down since. This creates a unique market where technology and defense are converging like never before. So without further ado, let's break down the three stocks that I'm watching right now. The very first one, NVIDIA. Yes, NVIDIA. And honestly, if you're not paying attention to this stock, you're missing the biggest stories in the market right now. NVIDIA isn't just riding the AI wave, they are fueling the AI wave. Here's what makes NVIDIA so compelling. They supply the advanced chips that power everything from cloud data centers to autonomous vehicles to generative AI applications, and they're all what are transforming entire industries. As of this recording, they've officially surpassed Microsoft as the most valuable publicly traded company in the world. Now, let's be honest. Right? NVIDIA has had some volatility. The stock hit an all-time high in June of 2025, just days before this recording, but it's also seen periods where it's dropped below 100. That's the nature of high-growth tech stocks, especially when they're this closely tied to emerging technologies. But here's what traders need to understand. NVIDIA's dominance in AI chips gives them what Warren Buffett would call a moat. If companies want to build AI systems, they need NVIDIA's GPUs. It's that simple. And with AI adoption accelerating across every industry that you could think of, that demand isn't going anywhere anytime soon. From a trading perspective, NVIDIA is highly liquid, widely followed, they're optionable, and it tends to exhibit strong, and I mean strong momentum during periods of tech sector strength. Plus, its earnings reports are market-moving events that create opportunities for options traders who know how to position themselves correctly. The analysts seem to agree. We're seeing price targets as high as $250 from Loop Capital, with many projecting the stock could easily reach $300 to $1,600 over the next 5 years, and depending on how quickly AI adoption continues to expand. Now, NVIDIA is a must-watch for any trader. Next, let's talk about Palantir. And this is where things get really interesting. Palantir sits right at the sweet spot of AI and defense, two of the hottest sectors in the market right now. What makes them special is their focus on AI-driven data analytics for both government and commercial clients. But it's their government work that's really caught my attention. They're providing advanced decision-making tools for military and intelligence applications. And let me tell you, business is booming. Just recently, Palantir secured a $795 million U.S. Army contract for their Maven Smart System software licenses. That's on top of the other major contracts, including a $178 million deal for the Tactical Intelligence Targeting Access Node System, which is the Army's next generation deep sensing capability, all powered by AI. What's also really driving their growth is what defense experts are calling software-defined warfare. Modern military operations are increasingly dependent on AI systems that can produce huge amounts of data in real time and give commanders battlefield advantages. Palantir is essentially building the brain that powers these systems. The stock has been a rocket ship, up over 460% year over year. And as of mid-2025, this stock has been a rocket ship, up over 460% year over year as mid-2025. Now, of course, this kind of growth brings volatility, and Palantir is definitely a stock that moves with news flow around defense contracts and geopolitical events. But volatility is exactly what creates opportunities for skilled traders. From a technical perspective, they offer traders exposure to the defense sector's momentum, especially during spikes in geopolitical tensions. The stock is liquid, has active options market, and tends to rally on defense-related news, which we've seen a lot of that happening lately. Now, speaking of defense, the third stock on my watch list is Lockheed Martin. This one might surprise you because it's been a quiet performer compared to the AI hype stocks, but sometimes the quiet performers are exactly where you want to be. Lockheed is what you might call a defensive defense play. They're not chasing the latest AI trends, they're the bedrock of U.S. defense infrastructure. We're talking about F-35 fighter jets, missiles, missile defense systems, and next-generation military technology, including AI integration and space-based defense systems. What I like about Lockheed is the stability factor. While AI stocks can be volatile based on sentiment hype, Lockheed's business is built on multi-year government contracts with predictable cash flow. The company has a $176 billion, with a B, backlog of orders, and they've been paying dividends for 29 consecutive years. Come on, guys. Another angle that traders need to understand is the rising global tensions typically benefit these defense contractors like Lockheed. Whether it's the conflict in Ukraine, tensions in the Middle East, or concerns about China in the Pacific, increased defense spending usually means more contracts for companies like Lockheed Martin. The stock trades at just 17 times the 2025 earnings estimate, cheaper than the broader market and offering decent dividend yield. That might not sound exciting compared to triple-digit AI stock gains, but for traders looking for stability and consistent returns, especially during market volatility, Lockheed offers something different. Plus, let's not forget that Lockheed is also investing heavily in AI and next-gen defense technologies. They're not only building the weapons of today, but they're developing the AI-powered defense systems for tomorrow. Now let's tie this all together. These three stocks work so well together as a watch list because they represent different ways to play the exact same underlying trends. NVIDIA gives you pure play exposure to the AI infrastructure boom. If AI continues to transform industries at the pace we're seeing, NVIDIA is positioned to benefit regardless of which specific application takes off. Palantir gives you the intersection of AI and defense, a company that is taking cutting-edge technology and applying it to some of the most critical challenges facing governments and military organizations worldwide. And Lockheed Martin? Lockheed Martin. They give you the stability and defense characteristics that can help balance out the volatility of high-growth tech stocks while still benefiting from increased defense spending driven by global tensions. From a trading perspective, each of these stocks offer different opportunities. NVIDIA and Palantir are high beta plays that can see dramatic moves on earnings announcements, contract news, or changes in AI sentiment. They're great for traders who want exposure to momentum and don't mind the volatility. Lockheed, on the other hand, tends to be more stable, but can spike during geopolitical events or defense-related news. It's also an income play, with that dividend making it attractive for long-term positions. All three stocks have liquid option markets, which gives traders flexibility in how they want to position themselves. Whether you're looking at directional plays with calls or puts, or income strategies like covered calls, these stocks provide volume and open interest you need to execute efficiently. Of course, no trade idea is complete without discussing risk. For NVIDIA, the main risk is that the AI hype could cool off, or that competition could erode market dominance. The company also faces regulatory challenges, especially around chip exports to China. For Palantir, the risk is that their high valuation that they're trading at is a substantial premium. It leaves little room for error. If growth slows or they lose major contracts, the stock could see significant corrections. And for Lockheed Martin, the main risk is that their growth is tied to government spending decisions, which can be influenced by political changes or budget pressures. In my 25 plus year trading career, I have seen a lot of market cycles. But what I am seeing right now with AI and defense spending feels different. We're not just talking about the next hot stock or sector rotation. Kind of like what the internet did in the mid-90s, we're talking about technologies and geopolitical shifts that could reshape entire industries over the next decade. These three stocks, Nvidia, Palantir, and Lockheed Martin, give traders different ways to position themselves for these massive trends, whether you're looking for high growth momentum plays or more defensive positions with steady cash flows. This trio covers a lot of ground. Remember, successful trading isn't about hitting home runs every trade. It's about identifying major trends early, positioning yourself appropriately for your risk tolerance, and managing your positions with discipline. I'll be watching these stocks closely in the coming weeks and months, looking for technical setups that align the fundamental drivers we've discussed today. And of course, I'll be sharing my analysis with you right here on this channel. What do you think about these picks? Are you seeing the same trends that I'm seeing? Drop a comment down below and let me know what stocks are on your watch list right now. And if you found this analysis helpful, make sure to hit the like button and subscribe to the channel. Until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and remember, you're just one trade away. Click here to check out another great training to help you become a better trader.